You all along talked about the power of deregulation for the past year, and it made sense to you that animal spirits were increasing. Now we've got the tax bill. The market seems to be at least foreshadowing that the economy really can grow quicker than it has for the past 8 years. Maybe there's different things that make a stock market move, but at this point, do you think the economy can grow at 3% for a sustained basis based on the tax law and deregulation?
I think that the opportunity for the country to grow at 3% is real. I think the current situation seems like irrational exuberance. But we've had 8 years of substantially below trend growth. And I think one of the arguments, and I don't know the answer, but I think one of the arguments is that if you've deferred maybe 1% of growth over the last 8 years through overregulation, et cetera, and you start uncapping the bottles, growth may in fact dispute the cycle. And, whereas right now, 9-year cycle is a very long cycle. But maybe if 8 of it is at 2% growth, the cycle is much longer than we're used to because we don't have any experience.
Real estate is in a different position than a lot of corporations when it comes to NOLs. These carry forwards are still things that can be used in real estate. So what does that mean when you start assessing real estate versus stocks with any of these changes? Does it impact things?
I think that the NOL, or net operating loss carry forward changes, reduce the value of NOLs. But the level of reduction is probably 15 to 20%, which is really not so much because everybody discounts NOLs at 40. So the 40% discount is now a 20% discount, but it's still a discount, and the tax law does reduce the value of NOLs going forward.
I mean, you are somebody who has made a huge business of this, going around
Yes.
identifying places where these NOLs were very valuable and nobody else had figured it out yet. So have there been changes in prices that you can go back in and say, okay, here's a place where we can really put this to work where the rest of the market hasn't figured it out yet?
We're obviously continually looking for those kinds of opportunities. More difficult in a low interest rate environment than in a higher interest rate environment.
Because?
Because in a low interest rate environment, the charge is much lower, and therefore you have less to work with in terms of benefits of shield that an NOL can create. Well, I think the blockchain technology may have some interesting future obligations, but I think the identification and attempt to replace fiat currency with a cryptocurrency, I think is not likely to be very successful.
So if we're having this conversation in 5 years, will we be talking about Bitcoin? I mean, do you think this goes to zero, or do you think there's more to it than that?
I think we'll be talking about blockchain technology.
Right.
And its relevance. I think the Bitcoin part of it will be less relevant.
Have you made any new investments in the Middle East, and would you at this point?
We haven't made any new investments in the Middle East. I think it's too broad a question to ask that way.
Okay.
I think there's always specific situations that are attractive enough to generate enthusiasm.
Okay, I'll ask in a more narrow way. Would you invest in Saudi Arabia?
I think that's a challenge. I don't know enough about it to answer the question.
How about Israel? You've invested in Israel before.
I have, and I probably would again. It's a very, very, very competitive market, but it is a market with reasonable degree of rule of law, and that's a positive.
Let's talk about international markets. Are there any that you think look like they're more reasonably priced than the United States?
Oh, yeah. I think Latin America is much more attractive. I think Mexico is very attractive. I think Brazil is attractive. I think Argentina is attractive. Relatively speaking, of the, quote, undeveloped world, they're far enough along in terms of creating the capital structures to be able to both create the investment and monetize it.
A big part of what had been missing up to this point was capital spending, and that is coming back from corporations. What do you think that's a result of?
Confidence, predictability. You've gone from an administration that said you didn't build it to an administration that says, how can I help you build it? And that translates into the positive numbers you've just laid out. It wasn't so long ago, I think it was it was a year ago, when shows like this made fun of Trump, who kept predicting 3% growth all over the place. You know, we haven't had 3%, we haven't had anything over 2% in 10 years. Now this guy comes along and says he's going to make 3% growth.
I think he's also said 4% and 5% growth.
Well, it's early. I think we're much more confident about the economy generally, but we're still very late in the cycle.
What did you make, by the way, of all these companies announcing that they're going to have these one-time bonuses?
A little gimmicky, a little, you know, I want you to have a goodie. I mean, I think you're right, Steve, that at least history says that one-time anything has very little impact. I mean, didn't George Bush have one-time tax refunds or something?
There was a repatriation that they did at one point that was supposed to be the American jobs.
But it didn't, you know, didn't do anything. There's nothing.
Because it was a temporary.
But this is right in line with our discussion about confidence. If you raise my salary, then I am confident my income is going to be X. If you give me a bonus, I like the bonus, but I don't start the next pay period assuming I'm going to get another bonus. And therefore, I'm less confident than I would be if you'd raised my salary. And I think that's, you know, and I think you could take that analogy and apply it across the board.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.